Welcome to Burlap Teachers. Enjoy the video.
In this video, I will explain how to get trade insurance. Trade insurance, also known as credit insurance, is a vital tool for businesses engaged in domestic and international trade. It safeguards your company against the risk of non-payment from customers, whether due to insolvency, bankruptcy, or political instability in their region. This protection allows you to offer more competitive credit terms, expand into new markets with confidence, and secure your accounts receivable. Understanding its benefits is the first step toward financial security in trade. There are several types of trade insurance tailored to different business needs. A whole turnover policy typically covers all your eligible sales, providing broad protection across your customer base. Alternatively, a specific buyer policy focuses on individual, high-value clients or contracts, offering targeted security. For international trade, political risk insurance is crucial, shielding you from events like war or expropriation. Export credit insurance specifically addresses the unique challenges of selling goods across borders, ensuring your payments are secure. Obtaining trade insurance involves a few key steps. First, evaluate your business's specific needs, considering your sales volume, customer concentration, and risk tolerance. Next, engage with an experienced insurance broker who specializes in trade credit. They will help you navigate the market and find suitable providers. You'll need to provide financial details about your business and your key customers for risk assessment. Finally, thoroughly review the policy terms, paying close attention to coverage limits, deductibles, and any exclusions to ensure it meets your expectations. The benefits of trade insurance are substantial, including improved cash flow and a stronger balance sheet. It can also enhance your borrowing capacity, as banks often view insured receivables more favorably. However, it's important to weigh the cost of premiums against your potential exposure to bad debt. Also, familiarize yourself with the claims process, understanding what documentation is required and the typical timeline for payouts. This preparation ensures you can maximize the value of your policy and maintain financial stability.
Thanks for watching. Consider subscribing if this video helped you.